So, every day, as I was sharing with you, because we have such an online presence, we get dozens, probably like 40, 50 leads every day. And unfortunately, the media, people watch movies and they have this impression that, hey, I just need to look for a low tax jurisdiction. I'm going to set up a company there, and then suddenly I'm going to save all this money in taxes simply because I opened an office in another jurisdiction, and there's some sort of shared services or whatever, so related party transaction. And the reality is that, yeah, you're absolutely right. Tax authorities figured this out like decades ago. You're just like a few decades late. They know that with related parties, there is an incentive to somehow shift the profit from a high tax jurisdiction to a low tax jurisdiction. So as a result, all these related party transactions must be done in such a way that they're arm's length. They can't be any way, it can't appear as if you're trying to shift profits from a high tax to a low tax. So yeah, I mean, this, it's so strange, and people get upset that when you tell them stuff because, the media or whatever, there's this impression that it's so easy, but unfortunately the reality is a lot more complex than that. What exactly is transfer pricing generally? How would you describe the discipline of transfer pricing?
Yeah, it is simple and it is difficult because it's simple. So in a layman's term, when a multinational enterprise, a company, a corporation having offices, having presence in more than one country, and they're performing some business functions there, they generate an income because of those functions. So the tax authorities now want to tax that income, and since those companies are related, there could be potentially a tendency that the profits cannot, can be rather, tweaked to look like, more income in a low tax jurisdiction. That's what the tax authorities think. May not be always true, but that's what the reason or the logic for this transfer pricing regulations are. So when a corporation or their different group entities are producing something or providing services or generating revenues by whatever means, the tax authorities want to get their fair share of profits to tax within that country. So what is important here is that as a transfer pricing consultant or as an advisor, we try and look for the functions that are being performed by that corporation in one particular jurisdiction, and we try and split the functions which are performed in that particular jurisdiction compared to the other jurisdictions. So if you allow, Darren, I can take a quick example. Again, a simpler one. So if say a manufacturing company which manufactures say computers, and now they have different functions which has to be undertaken. There are assets, there are factories, there are other manufacturing intangibles required to manufacture those computers, and then they eventually have to sell it to make the profits. So one company, say based out of China, is manufacturing components of that computer. Then their related company in the US, they get that complete components, or they assemble it rather. I mean, in the US, or they get a full, as a complete set of computer, and they market it. They sell it in the US, or they market it in other countries as well. So, in order for the company as a whole to get the profits, it has a manufacturing function, it has a marketing function, but those are split between different jurisdictions. So now Chinese tax authorities and the US tax authorities want to tax those profits which the company has earned. So part of those profits belong to China, other part of that belongs to the US. So these profits are split based on what is called a functions, assets, and risk analysis. Somebody has to find out what functions, assets, and risks were deployed in China and what others were in the US. And based on that, the profits are, identified relating to that particular jurisdiction, and based on that, these are taxed. But I'll be happy to discuss in more detail if there is any other related question that you have. But this is the basic fundamental of transfer pricing. So it is actually a tax-related matter, trying to tax the profits relating to tangible or intangible assets and functions, assets, and risks of each jurisdiction.
Thank you. That's a pretty comprehensive introduction.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.